All right, ladies and gentlemen, I hope you had a wonderful day. We had another wild one, and a lot happened. We had a gap up in the morning, and it's very important. And a lot of people were talking about the ADP jobs numbers coming in soft. That was the labor. You even had the PMIs today on the services, but that wasn't the main story. The main story today is oil down 5%. So why I'm bringing this up, we've been talking a lot about the bonds, and I have a way to tie this into the bonds that I'm going to go over with you today, but more importantly, I want you to know what happened the last time oil dropped this much. I was watching it today. I saw it down like 3-4%. I thought it was going to bounce at one point. I didn't realize it closed down this low, and this was after hours. You got to take a step back and view it. But this is the worst day for oil this year since September of last year, and specifically right here, like September 23rd. We're going to zoom in here. This is very important as you see the month of September, but like the 23rd, the 26th, and then this bounce. But what was happening here was the UK GILTS situation. Remember the bonds in Great Britain? They were blowing out after the Liz Truss situation. That was a big problem, and also where you saw oil have a big downside reaction. So I'm bringing that up because we need to talk about that, and more importantly now, what we have moving forward. The main theme is simple. We're really right where we were at yesterday, a little bit lower from that data. And remember, that good jobs openings data, that wasn't good. The ISM side today in ADP, they show good things for employment, but not good enough. You're pretty much at the same level. We have not really much data, just Fed speakers tomorrow, but then on Friday, the non-farm payrolls, that's the first big event. Then October 12th, next Thursday, after the CPI, that should confirm bounce, rally, death, destruction. Who knows? So, Chad, we got a lot. I got a couple plays for you as well. We're going to go over all of that. You let me know if you need anything else. But what I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/The Stock Market. I will see you there in the morning. But right off the bat, I've been forgetting the intro, so run it, baby.
Loaning on my F350. I don't drive a fucking EV. Gas tank still on empty, but I'm gonna keep on driving all week.
All right, so let's get into it. What we're going to start with is the calendar and really understanding this gap up this morning. The one thing I want you to notice is that we were already up before you had the ADP data. So those private payrolls, they came in around what time? 5:15 a.m. Pacific, pretty early there. It's even before any like CPI. That's usually 5:30 or 8:30. A little bit before that, this is private payrolls. The difference, everybody was asking this on stream, between today and yesterday. Yesterday was job openings. That's how many job listings are available. Government listings, private listings, how many jobs are available. What we had today is private payrolls. ADP is literally a private company. If you go to the stock market, I think their ticker is literally ADP, Automatic Data Processing. They handle most of the payrolls in this country. That's why they come out with this data. We look at it for employment data. I think, look, they even have a trademark on it. Is that, oh no, previously revised. I wouldn't be surprised if it was a trademark, but hopefully you get the picture here. It's coming from private payrolls. It's the company giving this announcement. It is one part to the job situation, and for future reference, tie in every jobs data anytime you ever have a week of the non-farms. It starts with JOLTS jobs openings, then it goes into the ADP, then tomorrow you're going to get initial jobless claims, and then you end the week on Friday with the non-farm payrolls. This is the employment week where you're supposed to get the whole entire week. So that's where people were saying, wow, it's good jobs data. You would think yesterday bad jobs data, that was what was lifting us up. But what I'm trying to tell you is that there was things before, and it was actually Europe. There's only a couple of things that stood out. It's not like their PMIs or anything came in too hot, but retail sales, this was their worst pretty much since the beginning of the year back to last year. And again, bad data is good to a degree because you want a justification not to raise rates. And now this is where things get a little better. And like I'm pointing out, the main thing I want you to notice of today, where it's like, yes, the bonds and everything, you could chalk up today to stabilization. We said this on stream. It's very simple, man. Not dying and something not like dropping after weeks and months of this, that's the new rallying. Stabilization is a priority, and it's even valued by the market. And that's where you could see anytime the market's not dropping, if bonds have been stabilizing or the dollar, we've been taking that as good signs. But back to the point, I hope you realize how important stabilization has been. But as you go through here, I was looking at the GILTS auction. This was also today, and this is what some people were talking about, where they were saying, yeah, the UK GILTS, they're like, why isn't it reacting the same? I thought they were saying about it like it was lower, because it's not been lower. It even had on this week almost a quarter basis point move. Everywhere across the globe, you saw these gigantic reactions on bonds. That's why it has been so dramatic. But the thing about it, like I was showing you at the beginning of the video, we go to oil. It's the worst day today since the gilt crisis. Why did that happen in September? But now, even if we want to compare the context, like I'm saying, you had a gilt auction today. You go back a little further, October, September. I mean, this was the gilts blowout. I want you to see what happened. Think about it. Back then, last year, remember, we reacted also. You also were going post-Jackson Hole. Our market was even coming down. There's a lot of context to it. There's a lot going on around this little September last year, but I think the gilt situation, it falls right in here. These little like death blows before the little pop and then the October 13th low, and then that leads you into like what we're getting into right now. But hopefully you see what I'm kind of showing you here. There's a lot of differences. It's like oil's reacting, and why did it react then? It's because people were reacting to the economy. You could argue that happened today, but before we get into that, I want you to see, though, the gilts are going insane. Last year, it was all about the gilts. Then we had our own little response in October with the Fed, and we were coming off of post-Jackson Hole, but this was nuts for what happened in Great Britain. Again, it went from 1.9 to 4.2 in like, what, a month and a half, and really just in a couple of weeks. And it got to the point where even oil was selling off. People were like, this was a big worry. So this is what I wanted to bring up, because this has not been mentioned as much. And now today, it's like, yeah, we got our stabilization. We chilled out. Everything's playing in line. I still do think we have a chance of this. Like I said, just nothing's confirmed, not really willing to make a mind up. And hopefully, even if you look back at oil, that same type of caution, you know, is exactly what I was saying earlier. People didn't like the answer when we're like, yeah, it's either going to be really crazy or not. It's either going to go up or down. Yeah. But like I was saying, it could tell you how people are reacting, and you could get something out of this. So the fact is, oil's not going up anymore, and now it's starting to drop. Yeah, markets are stabilizing. We need to watch some of these trends, but this is something pointing out. I'm tying it in even into Europe. I'd watch those gilts in part of today. It's good. It got us out of the way. Maybe we have enough to carry us into tomorrow. I think the next up or down, maybe oil or anything, we either need something out of another country. That will be the dictator, or, and no pun intended, or at the very least, our data will give us the next driver in the next week. You'll have a couple of days to roam free, get more updates, but then it'll boil down to the CPI, then bank earnings, and then before you know it, you will have your answer. Just like oil, I think, again, you waited a little, and now we're getting some answers, and that's all you got to wait for next. So, Chad, I hope you enjoyed it. I hope you even watched the watch list yesterday for the bond yields, because that's another part. But other than that, we chilled out today. Like we said, we got data, and yeah, it had a reaction, but this is why I showed you this whole video. I think we were just driven off of broader stabilization and some of this stuff earlier in the day that kind of gave us some of the lift in support, and then we just reacted to not getting bad news. Again, stabilization, I'm going to take that as good news, but it doesn't mean it's good forever, but we'll find out what happens. So, Chad, I hope you're ready, but now Let us get into the plays. So, right off the bat, I have a couple of plays for you. And I'm going to start off with one. I don't know which one. Maybe we'll see. You see Rite Aid? I'm still in it. I haven't been able to close out of the covered calls yet and make my move, but they do have earnings tomorrow, I believe, but that's not the play. I was looking at it because there's another company that talked about restructuring and doing stuff, but they gave an update, and it was after hours. BlackBerry, they said they're going to separate into two businesses following a review of their strategic alternatives, and they are going to separate their IoT business and their cybersecurity business units, and the IoT business is going to IPO. So stock went up a little bit. We'll see. Again, don't fall in love with anything. I think up until October 13th and answers from the data and then kicking off earnings, I'm not ready to make my mind up on everything. I think it's the Wild West until there. That's why you could either go for flips on the day, whether you want to hold or not. That's going to be up to you, but we'll be watching this. We'll see. That news all came in after hours. That's going to be play number one. Then play number two, we caught this one, man, earlier today. It's MRTX is the one I played, and this is the one I want you to see, but I put in Virtue. It's Nuval, Nuvl. We caught this at like 2%. We caught it on stream. I wasn't able to make a play. I was able to get some news. There was no news on it, but I saw something from earlier in the day. They ended up popping up on a biotech calendar. Then a couple minutes later, Chad, hey, Sos, they were able to confirm it, and they were saying, yeah, we have confirmation. Then you had a stifle upgrade. Then the data all came out, but it ran 35%. But then also mentioned there, I made a play on this. I ended up losing $3. Could have got 20 if I held a little bit longer, but MRTX, this was one of the sympathies, as well as Amgen, IMTX, J&J, MRUS, and then VSTM, and then obviously Nuval. Now, here's the thing. All of these tickers that I just listed, I don't know how direct they were, but in the process of confirming the news, these all came up as related to this type of drug approval. So usually there's some sort of sympathy related, but thought that one was interesting. I ended up going with the MRTX. I went with 100 shares. Like I said, I held it. I think I got it around here. It was the only one that moved like a sympathy. That's why I decided to go with it. Then it ended up selling off. I held till the end of the day, got back up to like break even, got my $3 loss. Then it went up a little bit. So we'll watch these tomorrow, but this one was a little bit of excitement today. Definitely thought that one stood out. So that is play number two. And then finally, play number three. I think it relates to everything. You could kind of see it from last September, but if bonds do stabilize, if you watch oil start going down like it's last year, if we do get some of that rate stabilization, you may even get oil kind of stabilizing. So that could be something to watch. I've even been saying watch wheat a little bit. I told you about that like 533. You got to like 540, then bounce. Still haven't made a play on this, and that's why like even watching this over the last couple weeks, I'm kind of glad because you're getting little pops and drops, but otherwise you're not making too crazy of movements. Even oil, like we said, waiting for that confirmation. So like I'm saying, maybe tie it into broader factors like the bonds. If we do start to get real stabilization after next week or whenever the data really confirms that, then maybe we watch for oil to kind of find a spot to stabilize that's a little higher but not breaking out. And then if it does break out, well, there's your new problem. So those are the main plays. That's going to be everything else. I got out of the MES yesterday. I was down on that, flipped out. I got like $17 or $20 or something, or 30. I don't know. I got to double check, but small gain, got out of that. Like I said, play the data tomorrow. You're not going to have much as Fed speakers, so watch for the stabilization, the dollar, the bonds, all those other factors. Other than that, we should have moves on Friday, non-farms. And that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember the things that you say control the distance and duration of where you go, how long you go through it. Control the words that you say to yourself, others, but really even for yourself, though. You know what I'm saying? I'm telling you, that'll tell you something right there, baby. And stay in the game and get ready because it's already a new year, man. Yeah, that's all. I hate to break it. It's already. So good news is you already made it. You're ready. If you didn't make it this far to not get, you know what I'm saying? You would have stopped the launch. You've heard it. But even then, like I'm saying, like why not quit in July, August, before that? Even wait. Here is the time. It's a new year. You could see it. The market's even moving around. But Chad, I love you. That's it. Don't let me go too crazy, too awkward. I'll see you on the 2K. God bless you. Shout out Cole Real Estate and Horn.